Today, we're going to talk about our private credit fund. Before I do that, I have to show you this quick disclaimer that my lawyers make me show you, and there you go. So, a little bit about our company. I started it in 2016 with my co-founder, who is also a veteran, to bring investors together with farmers, ranchers, agriculture businesses. And we've been doing that. You can see sort of our track record here, some of our numbers, and we've decided for various reasons that I'll get into to put together a private credit fund. So that is what I'm talking about here today. So our goal at Harvest Returns is to, of course, put together investors with farmers and ranchers, and this is kind of the way we do that. Our thesis and why we're bullish on agriculture is because the population continues to increase despite, in some Western countries that level of increase is going down. But between now and 2050, the world's population is going to grow about 20% to top out at about 10 billion people. And at that same time, those people are going to consume the calories they consume. Those requirements are going to grow, according to USDA, by about 40%. And the reason for that is as countries become richer, they consume more calories and they specifically consume more protein. So because of that, that's how we shaped the type of investments we do and some of the type of investments that are in this private credit fund. We believe that farmers can be profitable while growing food more sustainably and creating more food security. And one of the things that I'll highlight here is our livestock investments. We've done quite a few of those, and they've been successful. We believe in raising protein sustainably, doing it with regenerative methods, growing methods. This is things like grass-fed, grass-finished cattle that are grown in intensive grazing. And also the farmers and ranchers that we work with, they're capturing more of the protein value chain. As most people know, agriculture is a low margin business for the most part, but those producers and those agriculture businesses that can capture, vertically integrate their businesses are going to make more profits. So why are we doing a private credit fund? The first is very simple, because there's a demand for it in the agriculture system. As everybody knows, inflation is although it's coming down, it's still if you've been shopping, you see it's a thing in the food industry, and that's still a problem. And not only that, and interest rates are high, and banks credit is tight, so banks aren't lending what they used to. And so we've taken advantage of these trends to kind of put together this product which enables us to do short-term loans to farmers. And this is not something new. We've been doing this on individual loans since about 2019. I'll get into our track record on the next slide. These loans are across farmers and ranches and agribusinesses all over the United States, and they're collateralized with real assets. So that's land. They're collateralized with equipment. Occasionally, it'll be receivables. A small part of the portfolio is accounts receivable. Most of it is tangible things like land. And we've been doing this for a while. We see a lot of deals, and only in very few deals make it onto the platform and into our fund. So this is our track record. Put it against two common indexes, of course, the S&P 500 and the Bloomberg Bond Index. You can see that since we've been doing these loans over the past 3 or 4 years, we've got some nice returns, but it's also significantly less volatile than those other indexes. And the way we've been able to do this has been very careful with the loans we make and to manage them across the fund. And fortunately, up to now, we've had no credit defaults or workouts or anything like that. And we're going to intend to maintain that track record with this fund. This is myself, team. I'm a retired naval officer, 30 years active in reserve service. My co-founder and I also work in technology and commercial real estate and investing, and have been investing in startups for quite some time. Co-founder Austin Manis, Army veteran, who was also worked on his family farms, kind of grew up with that ag background when he was a teenager. Peter Lee, our CFO and leads due diligence. He's has about 25 years in private equity and structuring deals. And then Suzanne keeps it all together with some really tight controls. So this is the fund we're raising. It's a $20 million target. Individual investments, the minimum investment for accredited investors is $50,000, and you can go up from there. We've had this fund open. We've got about over $1 million. We're ready to deploy that, but we're ready to talk to new investors and and get that capital deployed by the end of March. We've already got deals ready to put it into. Some of them are pre-vetted, and we've already worked with those particular farmers and ranchers. The way this works is quarterly distributions with a 10% preferred interest. That's an annual rate, and anything above 10% will be split between the investors at 80% and us as the manager at 20%. So it's a 4-year term. You should not invest money that you need to access before the 4 years are up. And we're shooting for a 14.5% IRR, which, if you saw on the previous slide, that's pretty much right in line with what we're doing. So all that said, be happy to talk to you. There's a lot of ways you can reach out. You can give me a phone call. We can set up a call. You can send me an email. You can visit, of course, the Localvest, which shows the private placement memorandum. You can visit our platform, find us on social media, all those things. So be happy to take your questions in the chat or reach out individually. And thank you very much, Jake and Localvest, for having us on.